Hello and welcome to the day ahead. It's Wednesday, March the 25th. I'm Andrew Gagan. The local market is set to add to the previous session's gains, with ASX futures up around 0.6%. Global markets remain gripped in uncertainty, with Iran launching fresh attacks across the region, while the US looks to deploy some 3,000 troops to the Middle East. That saw oil prices resume their moves higher. US Treasury yields extended gains, while Wall Street's indices fell in a volatile session, as investors considered the economic impacts of the war amid conflicting reports of negotiations between the US and Iran. Energy led the gains, while tech led the losses. Shares of software-related companies fell, led by cloud software provider Salesforce, while Microsoft and Atlassian were also among the losers. Shares of Apple rose after revealing plans to introduce paid ads to its map services in North America. Private credit concerns resurfaced after a report that RS Management limited redemptions at 5% at its private credit fund, along with Apollo Global Management, as withdrawal requests surged. Jefferies rose on reports that Japan's Sumitomo Mitsui Financial Group is working on plans for a possible takeover of the investment bank. Shares of cosmetics maker Estee Lauder tumbled after it said it was in talks for a potential merger with Spanish beauty group Puig Brands. And US listed shares of BHP and Rio initially tracked the copper price lower before rising. Well, President Trump says the US is still seeking a negotiation with Iran.
We're actually talking to the right people, and they want to make a deal so badly. You have no idea how badly they want to make a deal, and we'll see what happens.
Well, meanwhile, Iran has circulated a letter to member countries of the International Maritime Organization saying that non-hostile vessels can transit the Strait of Hormuz. The Iran war is already taking a toll on major economies around the world, according to the latest business surveys. In the Eurozone, private sector growth all but stalled this month as companies signalled an increase in delivery times and expectations of rising costs that they said in turn would be trying to pass on, with the S&P Global Purchasing Managers Index falling to a 10-month low, and the US PMI output index has fallen to its lowest level since last April. Well, US Treasury yields rose after an auction of two-year notes met underwhelming demand. The yield on the two-year was up more than 11 basis points to 3.96%, and the 10-year was at 4.42%. Australian three-year government bond yields were at 4.77%, and the 10-year was at 5.1%. The US dollar index is up around 0.5% on the day. The Aussie has fallen to 70 US cents. Oil has rallied with no progress made on resuming the flow of crude out of the Middle East, while Iran's foreign ministry is quoted as saying that it had taken necessary and proportionate measures to prevent the aggressors and their supporters from exploiting the Strait of Hormuz to advance hostile operations against Iran. Brent futures settling around 4.5% higher at close to $104 a barrel. Gold initially extended its decline, weighed down by inflation fears and expectations of high interest rates, but has since rebounded. Currently, it's around $4,400 an ounce. Copper fell 0.5%. Iron ore is weaker at $110 a tonne, and Bitcoin is trading at just under $70,000. Well, ahead locally today, we get February inflation data. An ex-tropical cyclone Narelle is expected to re-intensify into a cyclone off the northwest coast, threatening LNG and iron ore facilities along the Pilbara coast. That is your day ahead. We'll see you again tomorrow.